You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Thanks for listening to MSE. I'm Bill Powers. In today's show, we're going to get a post-PDAC wrap-up with my friends Brian Leni of JuniorStockReview.com and David Erfle of Junior Miner Junkie with a Y.com. PDAC is the biggest mining conference worldwide for mineral explorers, held every year about this time in March in Toronto, and both David and Brian were attenders. Brian also spoke at the Metals Investor Forum before PDAC, so that was a long 5-day stretch for him in Toronto. But gentlemen, both of you, welcome on to the show. And Dave, I'll kick it over to you first. What was the vibe and the sentiment at PDAC this year?
Yeah, Bill, thanks again for having me on. Really interesting. Sunday is always the big retail day at PDAC. It's when you get people off the street coming, and you get more. You get a lot of students. You get the newbie aspect of the investor in the market, and walking around, you'd never know that the gold price the previous Friday had just made an all-time daily and weekly high close at $20.95, because it was a lot more subdued than past PDACs, even in past PDACs in bear markets, because since we've been in a bear market for quite a while now. But I went around to talking to people and talking to people in different booths and how much retail interest they'd had. And they said maybe one person came up to me, or maybe two people, or some even none. So that was really, really interesting. It got busier on the subsequent days, but I just thought that was really noticeable on Sunday.
Brian, would you concur with that sentiment?
Yeah, absolutely. It was pretty dead on the Sunday, and kind of relaying it to Metals Investors Forum. And again, there was 3 conferences going on at the time, so I would wonder if it's almost overload for some people. But Red Cloud and Metals Investors Forum overlapped on the Friday, and you could shoot a cannon down where the little booths were set up on the Friday. The Saturday was a little bit better, but altogether, yeah, absolutely, I concur with David's view of Sunday at PDAC, because it was quite vacant, and it was noticeable how many booths were empty. And another thing we were talking about before, they put the letter writers presentations on the floor this year, and I wonder if that's because they had extra room, because I'm pretty sure in that back corner there used to be at least a few booths. So maybe there's a way to kind of disguise that, even though it probably is a much better place to have the presentations is right there with the company booths and the investors exchange. But yeah, and then mind you, I was there on the Monday, and I thought the Monday was decent, but you have no idea if that's retail or if that's mining industry people. Mining industry people is not a bad sign, but of course it isn't necessarily the retail, which would get me excited in terms of interest and possible uplift.
David, the BMO conference was the week before. This is where the major gold miners and some of the big pre-production developers go, and you get some of the hedge fund managers and so forth that go there. Did you get any feedback from people you talked to at PDAC about how BMO went?
Yeah, I mean, it was good as far as participation meetings and things like that, but it was a lot more subdued than past conferences. There was, there's money out there for the there's still money out there for the quality projects. That's, they haven't had any problems getting financed, but it's the smaller companies that are having problems. And but so it was upbeat, but a lot more subdued than past BMO conferences.
Brian, did you hear anything about M&A when you're at PDAC or MIF?
Not necessarily M&A. I guess the one thing I was told by a couple company CEOs that were there, that there was generalist U.S. fund money there, which I thought was interesting if it's indeed true. Of course, if they're window shopping, it doesn't really mean much at this point. But the U.S. generalist money is big money, and if that does decide to come into the sector, I think that's a really positive thing. But that's all I pretty much heard about BMO.
David, we've talked in the past about how the gold price and an uptick in M&A in the gold stock sector can bring in new flow of funds. Is there anything else that the gold companies can do to help bring in a new flow of funds?
Yeah, they need to target generalist investors more, but at the same time, you don't want to spend too much money on promotion. But it's basically the reason why the gold stocks have underperformed so massively is because they've had so much competition from other things. I know the gold price is at all-time highs, but so is the stock market, so is Bitcoin. So, the gold stocks over the years keep getting, especially the juniors who are very high risk, they keep getting more and more competition. And the more competition they get, the less liquidity they get coming into their stocks, because it's as we all know, it's a very capital intensive business. And now at the same time, you've got capital that's not cheap anymore. Capital's expensive, and these companies now are not just giving it to anybody. They're being, in these banks, they're being more choosy, and it's a fine line between too much promotion and not enough. You really have to gauge the market and wait for an opportunity to beef up your promotion. Especially, you see a lot of these companies, what they do is they see the market turn and they start investing in promotion, which is a good idea. And they're also doing it ahead of a financing. They want to get their stock price up before they announce that financing. So a lot of companies are really good at doing this, and other companies are really bad at doing it. And the street knows which ones are bad and which ones are good. And the bad ones, they're just keeping pressure on the stock. They keep shorting it. So, when you've got a market that's devoid of retail, that doesn't have that buffer to where if you're putting out great results, right? You got barn burner results, you've got this drill program going, like, wow, we're firing all cylinders. We raised enough money to have this drill program, and we're doing great. We're hitting where we said we were going to hit. Wow, look, we got bonanza grade drill results here. It doesn't matter in a market like this if you don't have the capital to keep going. The first thing the street's going to do is they're going to look at, if they look at a barn burner press release, they're going to look, first thing they're going to do is look, how much money do they have left? Oh, wow, look, they've only got 6 months of capital left. Let's short the stock. Let's keep pressure on the stock. Then we can come in and we could get in on a panic finance. We can get probably a full 3-year warrant. And then to top it all off, we could strip the warrant in 4 months and sell the shares. So we need retail to come into the market to stop them from being able to do this.
Brian, do you think that House Street and Bay Street have too much power over the share price of these illiquid juniors that need cash?
Right now, I think they do. Yeah, just as kind of David is alluding to, until retail comes in and is that buyer or that person that rides the share price up, I think, yeah, they do have control. But, in terms of like what brings them back in, I do think it's going to be greed. I think that you're going to see the good company share prices starting to rise. An example that, over the last 2 years, a lot of good news was sold, as David was alluding to. I think you started to see good news bought, and it's not necessarily held to the highs that they hit, but I'll use Kenorland Minerals. They convert a 20% position in Frotet. They convert that into a 4% NSR. The share price moves from 60-ish cents up to 80. Comes back down to 70, and then this week it's back up to 80. To me, I don't know if you necessarily saw that if it was released in 2023 or maybe even the late part of 2022. So that's one individual company, but I think there is a few other instances where that is being bought by the market, and I think that's the start of a sentiment change. And I think that's the biggest thing. Like, if you see, one of the big things that people were talking to me about was the outflows of GLD, and they suspect it's going into Bitcoin. And it probably is. And the momentum or greed takes over people, and that's where all the attention goes. And I think it might be a little bit slower on the gold side or the precious metal side, but I think it's absolutely going to happen. And you just need more and more of this momentum to build, and probably in specific names. And then people, they come, they're like, oh, I'm too late on those. What can I buy? And then this is that tide that rises all boats, and that's really how you get the bull market started. That's how I see it, anyways. And then the market's in better control, and then the House Street and Bay Street look at the good news, and they're not as concerned with how much money they have. It's like, how much can I give you, and how quick, and that's how it flips. so easy. But
and it flips quickly too. When
it does. Yeah, it does.
Dave, do you
Just
think
like
we
if you
need
don't have that watch list, if you don't have that watch list ready of what you're going to buy, if you're waiting in cash, then it can be real stressful on what you're going to buy and what you're going to chase. And
do you remember the push in 2020? I remember off the COVID bottom, it was like 3 months in, and then I had never seen so much deal flow in my life. There were so many things that were hitting my desk, and that shows you how efficient they are when the market switches.
But that was a spike low, right?
Yeah, it was. Yeah.
The 2015 low was an accumulative low for 6 months, and then it started to come in really, really fast when the shorts started to cover, because the shorts had huge profits from shorting miners for the last 4 years, and then the short covering switch flipped, and boom, it was on.
Yeah.
Dave, do you think we should reinstate, since we're talking about short and junior miners, the uptick rule? I was reading an article about a CEO who was bemoaning the fact that, man, they're selling my shares down at close for weeks at a time, $500 worth. And I personally know some American investors that have bought OTC stocks at the close, push it up 10%, and they were locked out of their shall I say, the broker, their TD Ameritrade account over buying like $5,000 worth of an OT stock. But these guys can, drop it at the close all day in Canada, huh?
Yep. Not having an uptick rule is criminal. It really is. Especially in an illiquid market devoid of retail, when these guys can just push these things around and do what they want with them. Absolutely, it needs to be reinstated. I know they're trying to address this, but they're too slow as far as I'm concerned. By the time they finally do, it'll be too late. We've already had the bull market on, and it won't matter anymore. But it definitely needs to come back.
Brian, what about the libertarian argument? We gotta let everybody, each man for his own. If you don't understand the rules, can't play the game, you're gonna get eaten alive. What about that perspective?
And that's completely how I look at it, because it can work to the positive too, and nobody has a problem with the positive. But I understand the predicament, and I think the biggest complaint, the naked shorting, is a huge problem. It's illegal and it shouldn't happen. But in terms of how they manipulate the stocks, I think everybody hates it when it's against what they want, and then when it works in their favor, then it's like, oh, this is great. And so I think you need both. I think you need both extremes to contrast, and bad markets are bad markets, and you can use that to your advantage. If you have the courage. And I know it can be, you look at it, you're like, oh, this market's never going to improve. People just get upset, and they constantly see share prices falling, or this type of trading. But really, it just takes time to weed out all the sellers. And once the buyers outnumber them, and it turns, and then those things become positives, huge chunks that are bought at the end of the day or whenever, to manipulate stock. So I do have a libertarian view where you need both in the market for it to work properly, in my view. And but the naked shorting and stuff like that, I think, is absolutely wrong. And the companies that have been affected by it should be sorted out, and it seemingly hasn't been. I don't know why.
So Bridgemark ran a $50 million scam, and then recently in the news, this was 4 or 5 years ago, and they were just penalized recently. I think the lead guy was penalized approximately like $1 million, and a CFO that was involved like $100,000. Dave, this is what I point out. This is why many Americans don't invest in Canadian junior mining stocks, because you can run that big of a scam, and your penalty is just the cost of doing business. Right?
Yep. And absolutely.
Somebody could point to JP Morgan and say, well, look at them spoof the precious metals market, and they just get a little slap on the hand relative to the profits they make. And I would agree with that too. Any thoughts?
Right. Yeah, but they can't manipulate a trend, right? Nobody's big enough to manipulate a trend. You can manipulate inside that trend, but you can't manipulate a trend. So you just have to understand that it happens. And like Brian said, you use these things to your benefit. If you know that it's happening, you can pretty much guess as to why it's happening, and by price action in relation to what's going on, you understand that, hey, I see what this is. I'm looking at the commitment of traders reports. I see what this is. This is an opportunity for me to wait and wait till I think that it's going to start to turn, and then I get in.
Any legal rumors, Brian, that you heard? I always ask this question, legal rumors that you can share with everybody that's going to listen to this.
No, I can't say that I heard anything juicy. And even if it was that juicy, I don't know if I'd be able to, or I would sell you yet, to be honest. But no, I didn't. Honestly, there wasn't a lot of rumors. The whole landscape, I think, is so downtrodden that there's nobody who was that happy about what's going on. And most of the stuff that I heard that was on the positive side, people already know. It's like Origin and Altius Minerals. Their silicon is going to be it's a multi-million ounce deposit. Well, probably well over 10 million when it's all said and done. Those royalties that are held between the two companies are going to be something in the future. And I don't know exactly what that's going to be, but I would assume that something's going to be done between those two companies. I went to their party on the Sunday night, and it's usually my favorite party to attend as an investor because of the quality of the two companies that were holding it, but just the people that go there too. So in terms of, I don't know if that's a rumor, but I think that's pretty well known. But what I would say is you will see something come of that in the coming months. And that'll be probably a big deal for those companies or for shareholders that own those two companies.
Dave, any ground floor intelligence you can share that you picked up?
Yeah, the biggest rumor I heard is that IM Gold might be takeout fodder because they've got the Cote situation in hand now, and that company's really undervalued.
And so when you get
who isn't undervalued right now, right?
So I think we've talked about this in years past, Dave, but when you get something like that, the first thing you weigh is the source, right?
Yes, exactly. I heard it from more than one source.
Okay. And then for listeners' sake that are newer to this in particular, what do you take that's actionable for your portfolio out of that rumor, if anything?
Well, the stock is ripping like all the other miners right now, and I wouldn't chase it. I mean, you never chase a gold stock until there's a confirmed breakout. We're not even close to a confirmed breakout in gold stocks yet. And we still technically aren't at a confirmed breakout in gold yet. We need a monthly close above 2,100. So, yeah, I mean, I would just keep an eye on it. I would watch volume. If you see it rising with rising volume, especially on a day that gold's correcting, then that would give a lot of credence to that rumor.
Dave, what do you think about the Chinese takeout, stealing Osino Resources from Dundee Precious Metals? Any further thoughts on that one?
And the $9,000 I personally left on the table? Yeah.
Nobody made you sell.
We talked to Heya, remember?
Yeah.
I think this was on camera when I asked him, so Heya, what do you think the chances are of a Chinese company coming in and offering you an all-cash deal? I think he said something to the effect that, well, I wouldn't be able to walk the streets in Namibia if I did that. But of course, it's not up to him, right? It's not his choice. But it's not something he said he wanted to do. But look, a 32% premium, all cash deal is a 32% premium. So I understand why it happened, and I'm not shocked by it. And of course, it happened right before the Dundee deal was about to go. What was about to be confirmed. So yeah, I mean, of course, and that's a lesson, right? I mean, sure, I made money, my subscribers made money, we're happy, but it's a lesson as just, you can't go by what management says because they're not in complete control of that. It's the board, it's the shareholders. What are they gonna, what are they gonna vote on? So it's a lesson to say, hey, you should probably just wait, because when Dundee offered them that, it was right at the end of the year. And of course, I was like, wow, this is great. This is a big win at the end of the year that I need, because they're in a year that is devoid of big wins. So I was happy, and I'm still happy. But of course, you don't have a crystal ball. You don't know what's going to happen. But it's just another lesson learned that you wait. Always wait to see if some Chinese firm is going to come in, swoop in, and give an all cash offer, especially if it's an African developer. We've seen that a lot in these African developers.
And Dave, you don't think the Canadian government is going to put a squash on this one, right? No reason to believe that.
It's not in Canada. No.
Well, that I agree. But there's a 13% arbitrage right now It's selling for $1.66, $1.67. And I think just like a company I'm investing in is Solaris, and their deal with Xinjiang, the minority stake is under review by the Canadian government, and I think that's going to get approved too. But that might be why that 13% is kind of sticking out there, and it's for people. I know it's not a huge win, but it's probably an easy win in terms of how I see it.
Good point.
Yeah. So I don't know.
David, final thoughts, reflections on PDAC and where we're at in the market?
Yeah, I mean, going in the Friday before, it's it's funny that the famous thing is the PDAC curse, right? I mean, PDAC happens and everything starts tanking because everybody's got all their good news. It's sell all the good news, right? Well, the last 2 years, we've kind of reversed the PDAC curse, because going into PDAC, the gold price was going down and everything was bearish. But in last year, going into PDAC, was Silicon Valley happened, right, at PDAC. So the gold price ran up to $2,000, but it wasn't able to maintain that momentum, as we all know, and the gold stocks really started to get hit. This year, I think the reason why the gold price is doing what it's doing, it was sparked by what happened with New York Community Bank. In the rumors that it might be the next bank to go into FDIC receivership. They just got thrown $1 billion lifeline to save them at the last minute. But people are concerned now about the commercial real estate banking crisis. So, as far as the gold price is concerned, we still need that technical level, that technical close of a monthly close above 2,100. It's looking, because it's just this just happened. This move happened on the very first day of March. We got a lot of time in the month left. The gold price is extreme overbought now. And what is concerning on the shares is the GDX and GDXJ continue to go higher on falling volume. So that is, that's screaming there's gonna be a correction here pretty soon. Let's see what happens when I think the gold price is going to retest 2,100 at the very least. Let's see what the shares do when it does. Do they flag, or do they start going down rapidly again? So that's pretty much my takeaway as far as what's going on with the sector after PDAC. I think there's a really good chance that we're going to get that close above 2,100, if not March, then in April. And then I think we could at least go to 2,500. That's the cup and handle. Inside the cup and handle target is to like 2,390. And I think the big cup and handle target is 2,500.
Brian, are we at a bottom for your final thoughts?
I think we are. I haven't been this positive on my portfolio in the market in a couple of years. And I guess almost despite where the gold price and some of the other metal prices go, I see good things happening in the sector in my portfolio. So for whatever that means, I'm definitely positive, and I think this is a bottom in the especially the precious metals market. And I think 2024 is going to be a turnaround year for us.
Any other things you want to add, Dave, or is that?
Yeah, one other thing I'd like to add is as far as if you're looking at the long term and what's happened in the past and what may occur in the future. As far as the gold price is concerned, the last time the gold price was breaking out of a 13-year cup and handle pattern, like it's trying to break out of right now, was below 500. And once it got above 500, and had a monthly close above 500, the gold price went up 360% in 6 years. And as far as the gold stocks are concerned, I follow the HUI to gold ratio religiously, and it got down to a level that it reached in late 2015, early 2016 at the spike low in March 2020, and then right at the end of February, it reached that same level. And right on cue, we're starting to see that mean reversion begin, but we need to see continuous follow through. So we need that ratio to rise above the 0.09 level sharply, like it did the last two times when it hit that level. And we're going to find that out pretty soon if that's going to be the case.
learn more about Brian and David's services, go to the show notes below. I'll link to both of their websites, but their websites again are juniorstockreview.com and juniorminerjunkie.com. Brian, David, thank you for joining me and sharing your insights on today's show.
Thanks a lot.
Thanks for having me.